as a forex trader, there's something you really need to experience. It's one of the best feelings you can get, especially if you are just starting out. As simple as this may sound, a lot of forex traders, especially those that are just starting out their career in forex trading, in fact, most of them are still struggling with becoming consistently profitable. And I used to lay emphasis on the fact that the first step to your profitability is actually developing a trading strategy that works. The first on these three skills you need to become profitable is actually what we call trading strategy. You need to have a trading strategy, right? So how do you actually know that you started improving? Let me show you an example here. This is actually a trade I took today in SAE For the past few months, I've been trading gold consistently, only gold with this particular strategy here, and the result has been awesome. Now, if you are still beginning your career as a forex trader, there is something you need to experience. That feeling where you actually developed a trading strategy by yourself, you sat down by yourself and developed a trading strategy that works for you. This is not you trying to copy for this strategy or trying to place for this signal. You really sat down, put in the obnoxious amount of work and developed a strategy that works for you. And then you are trading using this strategy. You are trading following this strategy consistently. Have you had that feeling where you woke up in the morning, you analyze based on your strategy, and then you were patient enough to allow the market to play out according to your analysis, and then that market hit TP? There's a special kind of feeling that this thing gives, right? You might not understand if you've not been trading the forex market or if you are still struggling with strategy. You developed a strategy and you are working with that strategy and you are seeing the strategy play out. It gives a kind of joy, right? And that is the type of joy I think every forex trader should experience. It might not make sense to you if you are still struggling, but let me tell you something. For example, here, this is SAE. I used to lay emphasis on the fact that the reason why we develop a trading strategy is for us to have a kind of rule around our trading so that we don't become emotional, right? These rules is what will tame us, because human beings are naturally emotional. We find it difficult to make right decision when emotion and money is involved, right? And I used to tell my students that any decision you make around money is an emotional decision. So if you don't make a rule that will tame you, you are going to be struggling because you have to be chasing price up and down, right? So these rules and trading strategy will help you to be able to tame your emotion, right? Become disciplined and then trade without gambling. So now, for example, let me show you something very simple. This trade today is a very sweet one, and when you get a trade like this that played according to your trading strategy and you were there, you watched it play out and it hit maximum TP, it gives joy. And if you keep on expressing something like this, it's going to help you to build your confidence in your trading strategy, and that is how you start making a big step on your way to becoming profitable. Sharp. So now I decided to incorporate these two moving averages inside my trading strategy. These are EMA 20. The green one is applied to high, while the red one is applied to low. Now, how do I use this strategy? 5 minutes is my entry time frame, while 1 hour is my analysis time frame. So this is what we call top-down analysis. So I first of all go to my 1 hour time frame. 1 hour time frame, I want to make sure that the market is bearish or bullish. Right? How do I confirm the trend of the market? I wait for price to actually break below the moving average in 1 hour time frame. So in 1 hour time frame, I saw, let me mark out this area where price broke out of the moving average. As I see it now. So this area like this now, this is where price broke out of the moving average. Let me even delete it and mark the exact point or the exact candle that broke out of the moving average. For example, this is the bearish candle. This bearish candle here is the 1 hour candle that broke out of the moving average. So once the price has broken out of the moving average in 1 hour, I confirm the trend of the market, that the market is bearish. As you can see here, it broke out of the moving average, showing us bearish trend. What I do next is to go to my 5 minutes time frame to look for selling opportunity within that area. When price broke out of the moving average, I waited for a pullback. The rule says once price is below your moving average in 1 hour time frame, in 5 minutes, you only need to be looking for selling opportunity, and your sales should occur once price breaks out of the moving average as well in your 5 minutes time frame in alignment with the trend in 1 hour. Alright, so as you can see from this place, you see how price actually broke out. Since price has gone down like this, I don't just jump into a sell like this. It doesn't make sense jumping into sales like this. I wait for price to make a pullback to retrace into the moving average. Look at what's happened there. It retraced into the moving average and broke above. So people might jump to go and catch this buy, but we don't do that here. Our trading strategy and the rule around the strategy doesn't allow me to do that. What do? I wait for price to break out again in the direction of the bearish move in 1 hour time frame. So when price broke out of this place, from here, I smash that sell button. Look at it here. Short position. Look at the entry here. Right? And then my stop loss is always above the green moving average, slightly above the green moving average, because once price breaks above the green moving average, I don't have any reason still looking for sell. Why my TP is going to be 1:2. Right? I just target 1:2 using this strategy. And here you can see 1:3 reward ratio was actually smashed. So the rule is very simple. Once price is below the moving average in 1 hour, I go to my 5 minutes to look for sell opportunity. If price is above in 1 hour, I go to 5 minutes to look for buying opportunity in the direction of the trend I found in 1 hour time frame. So this is very, very simple. Once you have a strategy like this and you're able to wait and execute flawlessly, bro, you start experiencing the joy of becoming a profitable forex trader. However, if you are still struggling with developing a strategy that works, it is very easy. All you need to do is just to sit down and develop a rule. Make a rule around your strategy. Make a simple rule that will tame you, that will make you to be able to work within a confinement of discipline around your strategy. So this is exactly what I've done for myself, and since then it has been easy, though with discipline and consistency, because there are times where the strategy is going to fail. There are times where you see a trading opportunity, it will play out according to your strategy. You take that by yourself and you still hit stop loss. It occurs a lot of times, but more often than not, we make more profit than losses. Like here now, for example, if you check this area here, this particular zone, you see that the market already gave me a bullish trend according to my trading strategy. As you can see here, I got this bullish trend according to my trading strategy. Alright, so once I see this breakout on this moving average, the exponential moving average applied to high, once price breaks out of it, I am going to be looking for a buying opportunity in my 5 minutes time frame. So let us check exactly what happened here. Assuming I took a buy here, even though I didn't take this one, maybe I wasn't around, but let's see what would have happened. So within that area is where I would have looked for a buying opportunity. So let's go down to 5 minutes time frame and see what really happened there. The 5 minutes time frame, if I took this back, what would have happened is this. As price moved up here, I'm going to wait for a pullback into this particular moving average. So let's just take this first pullback, for example. This first pullback here, for example, let me able to draw in and see what really happened there. Sharp, this is where I would have taken my buy, because once the impulsive move exhausts, I really wait for price to pull back, and the pull back here very close to moving average. I'm seeing this confirmation candlestick here for a buy. So let's just assume that I took that buy here, which is long position here. If I took the long position here, right, I'm aiming for 1:2. My stop loss is going to be below this moving average, and then I'll be aiming for 1:2. So as you can see, I was still able to get 1:2 in this trade, even though I did not take it, but it was just a very nice trade. And then here again, if price broke out of this place, this one must have hit stop loss, because there's no how I would have gotten 1:2 here. But normally, once I start seeing this type of range within my moving average, I don't really take trade anymore. This has been a very nice week for me in SAE. All I'm doing right here is just to encourage you, sit down, develop a simple strategy that works, and then stay disciplined on that strategy, right? You are going to be profitable.